This is the briefing for Friday, November 10th. Well, I have to say, this week the stock indices have really sent some mixed signals, and it's difficult to develop a strategy based on that because there are some divergences within the indices themselves. If you remember, we were looking at a lot of different scenarios over a period of time. One was whether this was a pause in a counter trend rotation, whether this was developing something greater in terms of a move to the downside, and then of course I talked about this being a bearish price pattern, and especially if this 430 area was traded through in the spiders, and you can see that it was traded through, paused below it, trade back above it, paused above it, and then of course broke through. Now the question is, what is going on here from this low? Because it appeared that the indices wanted to go lower, and that we're going to see potentially lower support levels tested, such as this 404 area in the spiders. Now, one of the things that's pretty obvious here is that this move up in the spiders, and this is volume on the spiders, this move up is really not attracting new buyers. The volume is just very, very low, at least at this point in time. Now, breadth in the S&P 500, we finished the week today with 365 shares positive as opposed to lower. So that really left only about 145 shares that were trading lower as opposed to higher. So there's some strength in the spiders or in the S&P today in terms of breadth, but volume is just very concerning. And of course, 52-week highs minus 52-week lows in the NYSE, negative 371, that's falling off. So you can see the divergences from an internal perspective that are happening, at least at this point in time. Now, also this week I talked about, I think it was Wednesday and last night's briefing, I talked about the fact that we look for trends in the market. And if you look at this on a daily basis, this is a downtrend because it's a series of lower highs and lower lows. And really, this was really the key right here, was this high coming in right around the 438 area. And we tested that yesterday, and in today's trading, we absolutely took that out. Closing at the high of the day suggests that it wants to go, or the spiders want to go higher on Monday, but that's yet to be seen. Important resistance now is going to be 445 in the spiders. Really important area. If that's broken through, then it looks like we're in some type of a rotational pattern to go back up and test this 458, 460 area in the spiders. But you can see the problem here is really with volume falling off. Breadth is strong. That's giving us a conflicting signal. And then, of course, 52-week highs minus 52-week lows in the overall market are declining and continue to decline. So this appears to be still a weak rally, especially breaking through this 430 area. This part of the rally just seems to be even weaker than the beginning of it. In the Qs, we looked at this as being the potential for a rotational pattern, and I believe that's what's played out here with the Qs in the NASDAQ. Once again, volume falling off pretty significantly, volume flat in today's trading as opposed to yesterday. But we do have a divergence in breadth in the NASDAQ, and you can see that pretty clearly right through there. So the qualifications here of whether this is a strong rally or not is really not yet there. Although, I have to say, it looks like the Qs want to go back up and test this 390 area, and if they test that, then they're potentially going to want to break out of it. But this, different from the Russell and different from the S&P, certainly has all of the qualifications of being just a rotational pattern, and you can see that move through there. The Russell is diverging pretty dramatically. Now, we did have an up day above where the close was yesterday, but not an up day above the previous day as we did in the spiders and the Qs. But you can see this is still a series of lower highs and lower lows. The downtrend is still intact, closed below this 170 area. We did that yesterday and today, so we really, it really, this intermarket divergence is giving me somewhat of a concern also to the upside as well. Now, keep in mind this red trend line that I put in here, this is a head and shoulders top, and we never know whether it's a head and shoulders top until it's fulfilled, and it certainly was fulfilled because the distance from the head to the neckline is the same distance on the break of the neckline to this 165 area. We paused just below that area. This says 160 area where support held. And then, of course, we got this bounce off of it, still not taking out this previous lower high. And then, of course, we've got this move back to the downside once again. Volume falling off on the Russell, the IWM on this move here. So that's not proving positive also for this move to the downside. But as you can see, it's pretty clear that the Russell is showing much more weakness than the other indices. NASDAQ probably the strongest, and then the spiders following along with that. In terms of overbought and oversold, we were extremely oversold in the NASDAQ at the close yesterday. We worked off a lot of that, almost reaching overbought in the NYSE. And total volume, you can see, is declining as well. We have a little bit of a tick down in the NYSE, and NASDAQ volume is falling off pretty dramatically in today's trading. Looking at where we are in terms of the percent above the 50-week moving average and the 200-day moving average, I should say, and the 50-day moving average, you can see we had some improvement in the S&P 500. This was pretty dramatic, pretty weak as of the 27th. In that we were showing about a 10% of the stocks in the S&P 500 trading above their 50-day moving average, and only about 23% trading above their 200-day moving average. It improved slightly, but you can see a little tick down in today's trading, just giving us another example of the divergence that are occurring internally and with the indices themselves in terms of the Russell. Once again, you can see the tick down in today's trading in the NASDAQ above its 50-day moving average, same thing in the 200-day moving average. And the Russell, we had this tick down. Yesterday was a decent day in the Russell, almost 50% above its 50-day moving average, and then about 34% above the 200-day moving average. And then we ticked down. You can see this kind of a rotational pattern in the 200-day moving average in the Russell, with the lower extreme rolling right through here at 30, back below 30 once again. And you can see that just in the Russell, you can see the price pattern of how we didn't take out yesterday's high, and it looks like it's going to take out yesterday's low potentially. So intermarket divergences, internal divergences, it leads to a mixed picture, at least for right now. So the important aspects are, the previous day's high and low are the immediate support and resistance. And then in the spiders, we're looking at this 430 area as support, really important support, and really important resistance at 445. And going back to the Qs, support coming in now at the 374 area, resistance is at 390. And in the Russell, resistance is at 170, going up to the high, the high from, let's see, that's from the third, which, so that would suggest then that high right in the 175 area is the next level of resistance above 170. So that's kind of where we are. It's going to be a mixed day on Monday. I thought today would really give us some indication of a clearer picture than we had most of this week. As you can see, the kind of pause with a slightly upward bias in the spiders, but it didn't give it to us. In fact, it gave us more divergences to look at, and especially I'm really kind of intrigued with the divergence in the Russell between the other two indices themselves. We'll pick this back up on Monday. Have a great evening, and hopefully we'll get a clearer picture after Monday's trading. Have a great weekend.